We've put together this presentation to help explain what financial planning is all about and to show our philosophy and approach. I'm Michael Mobbs, Managing Director of M2 Financial Services. Before I start, I must stress that this presentation is generic in nature and is not advice intended for your own personal circumstances, so you should seek professional advice, maybe from us, before acting on anything you see here. Most of us have financial goals. It could be to buy your dream home, pay off your mortgage, fund your children's education, buy an investment property, or secure retirement by age 55. At M2 Financial Services, our aim is to help you achieve your financial goals in the most efficient way possible whilst managing the potential risks. To help explain our approach, picture a bath with 2 taps and a plug hole. The tap on the left represents your earned income, the income you work hard for every day. The tap on the right represents your passive income, such as interest on savings, rent from investment properties or dividends from shares. The plug hole represents your expenses like taxes, interest on debt, living expenses, lifestyle costs, insurance premiums and other fees and charges. To start accumulating wealth, you must first earn more than you spend, creating a surplus that can remain inside the bath. As your wealth accumulates, it starts to generate its own passive income. Initially, this may be in the form of interest earned on a savings account. Your wealth then starts to benefit from compound growth, as interest earns interest, and starts to grow a lot quicker. At any point in time, the wealth inside your bath can be invested in one or more of the 4 following areas: cash, fixed interest, property, and shares. Cash and fixed interest investments are considered to be low risk, low return investments. Property and shares are considered to be higher risk, higher return investments. For example, over the last 60 years, Australian property prices have doubled in value approximately every 10 years. If you are seeking security and protection of your wealth, then you should concentrate on cash and fixed interest investments. However, if you wish to accumulate wealth over the medium to long term, you should consider investing in property and/or shares. For most of us, our aim is to achieve a position of financial freedom. Financial freedom is achieved when your expenses are covered by the growth of your wealth and the passive income your wealth generates. Once we achieve this equilibrium, you can choose to turn your earned income tap off and stop working. Many people call this stage retirement. However, retirement infers that you will never work again, whereas financial freedom is about choice, the choice to work or not. At M2 Financial Services, our goal is to help our clients achieve financial freedom in the most efficient way possible, whilst managing the potential risks. Efficiency is all about narrowing the plug hole by reducing taxes, interest on debt, fees and insurance premiums so that more of your money can go towards reducing your debt and increasing your wealth. There are many risks that could impact your ability to achieve your financial goals. These risks include inflation risk or increasing prices, market risk or decreasing values, changes in government legislation, changes in exchange rates affecting the value of overseas assets and income, the risk of litigation and being sued. An increasing concern at the moment is the risk of living longer than our wealth and running out of money. The primary concern of your financial plan should be protecting your assets. The biggest asset is not often your house or your super, but your ability to keep earning. For example, according to the Australian Bureau of Statistics, the average annual salary is currently $75,613, which equates to an income after tax of $4,828 per month or $1,114 per week. Assuming annual salary increases of 3%, an average person working for 40 years would earn $7,185,164. If you lost your ability to continue earning an income before you achieved financial freedom, then the only way of covering your regular expenses and maintaining your lifestyle is to cash in your savings and sell your investments. This in turn would reduce the interest, rent or dividends you receive, forcing you to sell more of your investments and eventually maybe even your family home. Statistics of many Australian insurance companies show that 2 in 5 males or 1 in 4 females will suffer a long-term illness or disability before they reach retirement. Therefore, before concentrating on too many wealth accumulation strategies, it's important to first establish solid financial foundations from which you can securely build your wealth. Having the right amount of the right types of insurance can provide the lump sum injection and/or the passive income required to protect your home, maintain your lifestyle and secure you and your family's financial future. The M2 Financial Services approach to financial planning revolves first around managing the risks by establishing financial foundations from which you can efficiently accumulate and distribute wealth. Well, that's the end of this presentation. I hope it's helped to explain our approach to financial planning. You can find more information about M2 Financial Services and our philosophy on our website. I wish you a secure and prosperous financial future.